Today's trading action around the FOMC announcement saw a dip down to the 65.50 level, which was immediately bought up. We ended up closing at the big 6600 strike right on the dot, essentially flat on the trading session. Of course, all the volume today was right at that 6600 strike. So as we mentioned in yesterday's video, the possibility for a dip down to 6500 is increasing. This is our second largest gamma exposure concentration. That was also a big resistance point going back to the middle of August, which ultimately we broke out of. And so a retest of that 6500 level did look possible. However, with volatility getting crushed again today, we remain back down into the 15 level on the VIX. And so I think as long as that holds true, we could see some further consolidation around 6600, but these gamma exposure levels at 6650 and 6700 continue growing. And in fact, we saw quite a bit of volume, over 200,000 contracts traded at that 6650 strike. And so a lot of times when we see this much volume coming in at outlier strikes, these ultimately become targets that eventually get hit. So we're going to keep an eye on the volume heading into tomorrow and the monthly OPEX for September, which is this coming Friday. And so these could be potential targets in the near term if we continue seeing that volume come in, especially tomorrow morning. In terms of the overall gamma exposure structure, we are not quite as positively skewed as we have previously been over the last several weeks. However, implied volatility is still extremely low, as I mentioned, the VIX being in the 15s. So implied volatility has only been lower 11.9% of the time in the past year than it is right now. And so typically that combined with positive gamma exposure indicates that we are in a buy the dip environment. So we want to take a look and see what the total gamma exposure looks heading into tomorrow and Friday. We're going to be discussing this in our live stream tomorrow morning, which you guys can take a look at for free by heading over to geeksoffinance.com, or you can check us out in our community Discord. I'll put links in the description below to both of those so you guys can check it out.
Thanks, Anthony. Let's take a quick look at IWM. I thought this was very interesting. This morning in our live stream, we mentioned that IWM had a very prominent positive GEX cluster at 244. We don't usually see IWM with a target that's somewhat far away from the current price to this extent. So that was definitely unique. So now let's use a new tool that we just rolled out a few days ago, the time machine, and you can see what happens to GEX and to price as we went through the day. GEX is here. This big green bar is our 244 GEX we just mentioned. And so we didn't see a lot of movement, of course, until we got to the FOMC announcement. And then once we did, we immediately saw a large spike right up into that GEX cluster, right into the 244 area. So the fulfillment of that target was good to see, and it's a good example of how we're able to use GEX to give us an edge day in and day out. We didn't see GEX grow above 244, and sure enough, price did end up consolidating, dropping beneath that, and GEX gradually shifted as the day went on to reflect more GEX at those lower strikes. So pretty good example of how we can use this tool to our advantage. It left a pretty nasty looking candle on the daily chart, a big needle spike up, of course, to that 244 area, almost 245, and then failing and selling off to where we're not just below that big 240 GEX cluster, but also below the whole moving average on the daily chart. It still looks relatively bullish overall. Net GEX is actually slightly more positive today than it was yesterday. So it wouldn't surprise me to see yet another attempt higher as we approach OPEX Friday and quad witching. But, we did see some volume lower today. So we should know pretty soon whether or not this fade from the highs was it for now, or if we will see a more downside toward the 235 area.
Yeah, Sean, that small caps play was a really interesting play intraday. And we're also seeing a number of mean reversion potential plays popping up. For example, with Baidu, we've been tracking this for the last few days. Today it was up over 11%, closing at 137.82. Of course, the move over the last couple of weeks from below 100 to now trading just below 140, over a 50% move in just a matter of days has been pretty breathtaking. Gamma exposure at the 150 strike looks to be like a potential target. We're actually seeing quite a bit of volume coming in the options market at some of these higher strikes. We're looking at this as a potential mean reversion play, as I mentioned, and I'm looking at two potential scenarios. One is a tag of this 150 level. This is our upper dealer cluster zone, and I would expect, especially if we don't see gamma exposure growing at higher strikes, I would expect there to be potential dealer selling pressure kicking in at that level or above. The alternative is that Baidu does not make it up to the 150 level and we see a lower low on the daily candle bar, signaling that the momentum may be over. Either way, we think that when the turn does come, we could see a quick 20 to 30 point move to the downside. So that's something that we're looking for, and we're just trying to anticipate this price action ahead of time to see where our short opportunities may be. And so this is a name that is going on to our watch list, and we'll be looking for a trigger point entry here in the coming days, which I think is probably likely to happen pretty soon.
Anthony, as we've been discussing, the VIX finished its monthly option expiration this morning, closing just above 16 for expiration. And that made a lot of sense given the big negative GEX clusters that we saw at 15.5 and 16. So now with all of those options expiring worthless and the VIX spiking further into FOMC, we actually saw the VIX fade as the day went on, closing 1 penny above the 9-period SMA on the weekly chart, showing the importance of how these indicators can be used that I'm using, like the 9-period SMA and the whole moving average, which we've closed below the 9 SMA for several weeks in a row now. This does open the possibility that indices yet again attempt to push higher into OPEX Friday. So with the VIX flattening out here, the VIX generally, showing momentum to the upside this week, we need to keep a close eye on this.
Thanks, Sean. Next, let's take a look at Palantir. We've been tracking Palantir for the last couple of weeks, looking for a good entry point. Today was actually down 1.15%, closing at 168.30. And Palantir has been consolidating off of its 50-day EMA going back to the middle of August. We saw a consolidation period right around that 50-day EMA between 150 and 160. We saw the breakout here about a week ago, and today actually dipped back down towards that 50-day EMA as well as the zero gamma exposure level, which you can see highlighted by our blue line on the chart. This is right around that 50-day EMA as well. So an interesting spot there. You can see buyers stepped in, so the candle ultimately closed right near the open. Gamma exposure is concentrated at the 170 strike and higher up to 180. So the skew in the gamma exposure data is definitely to the upside. And ever since this breakout above 160, we've been looking for a potential entry point. We missed the opportunity today with the volatility surrounding FOMC, but I'm still watching for price to trade anywhere in this zone, whether it's tomorrow or Friday, for a potential entry for the next leg higher, which I think can make it to 180 in the coming weeks. So this is a trade that we're looking at potentially adding an out-of-the-money call debit spread into our portfolio mix, which, by the way, you can track our trades in real time as we manage our options portfolio by checking out our community Discord, link in the description below.
Thanks, Anthony. Let's look at ASML. It's been a while since I covered an idea that I thought was a good possible short play, but this stock has just gone parabolic. Congrats to the bulls on riding your way into wealth with this one. But you can see we have this big GEX cluster at 900. With a lot of volume there today too. The light blue is our daily volume. We also have a lot of GEX at 880, and that's close to where we closed at 872. But today's candle, even though we gapped down and we saw buying back up, we still closed almost right at the high from October of 2024. We have extreme positive GEX on ASML and almost to an extreme low on our GEX weighted volatility gauge. And I just mentioned that to say that we may be close to a contrarian short. And if this 880 is exceeded again, we may be headed to 900. But ultimately, it wouldn't surprise me to see a pullback to close this gap down in the 810 area and then reassess. So definitely one to keep on your radar screen.
And guys, for a limited time, you can get $300 off our yearly portfolio manager tier subscription. Use code September 2025 at checkout. This is a limited time promotion, and we do have a few spots remaining, but it will be ending soon. So definitely take advantage of it while you can. Members get access to our gamma exposure dashboard, our option option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies. And you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that. Thanks so much, everybody, for watching, and we'll see you guys in the next video.